Hello, good day. This is Si Wing Yi. I just want to go over this report just came out by Redfin only a few minutes ago. Today is 19 October. So let's go ahead and dive in and go over this another breaking news report. It says the title is Home Sales Listings Plunge over 20% in September, most on record aside from pandemic start. All right. So anyway, both buyers and sellers retreated in September. Surging mortgage rates made moving more expensive. Yes, that has been validated. However, home prices are still rose 8% year over year due to persistent tight supply and inflation. And furthermore, a record 22% of homes for sale had a price drop in September as home buyers, bidding wars eased. And it also said both buyers and sellers to stay put. Yes, stay put. The number of homes sold dropped 25% year over year, while new listings fell 22%, the largest decline since the beginning of the pandemic in May and April of 2020. And now the US housing market is at another standstill. Yes, standstill. But the driving forces are completely different from those that triggered the standstill at the start of the pandemic. This time it said Redfin economics research elite Chen Zhao. She said, I think it's she, uh, hard to tell. Look at my name. You can't tell. This time she said, or he said, this time demand is slumping due to surging mortgage rates, but prices are being propped up by inflation and a drop in the number of people putting up their homes for sale. Many Americans are staying put because they already relocated and score a rock bottom mortgage rate during the pandemic, so they have very little incentive to move today. How true? Zhao continue, the housing market is going to get worse before it gets better. And with inflation rampant, the Federal Reserve will likely continue hiking interest rates. Oh, this is not good. The rate is already around 7% as of today. That means we may not see high mortgage rates. What do I mean? We're already seeing high mortgage rates, the primary killer of housing demand, until early to mid 2023. Again, there's only one person's prediction. Zhao, the Redfin research analyst, predict that that we may not see a lower interest rate until early to mid 2023. So we're talking another 6 to 9 months of persistent high mortgage rate. That's what this person is trying to say. So until inflation is tamed, that's what's going on. That's my take on it. So meanwhile, this article goes on to say home buyers are backing off because mortgage rates are now at the highest level in 2 decades. Yes, true. Which has driven monthly housing payments for buyers up more than 50% year over year. Yes, that has been confirmed, which is very sad. All right, so let me see what else I can take away from this. Roughly 60,000 home purchase agreements were canceled in September, equal to 17% of homes that went under contract that month. So the homes that were canceled are most likely due to some of the buyers that were already under contract with a higher mortgage rate. When they have time for them to close escrow, they do not qualify because their income and the debt to income ratio, whatever, with the loans is such that they no longer qualify, so they have to back out of their contract. And while other, due to probably having cold feet, perhaps they decided to cancel anyway, even though they qualify to buy. They do not want to pay the higher mortgage, so they're gonna walk away from the contract and reset their purchase plan. That's my take on it. Okay, let's go over the data. The September highlight, September 2022. There's a lagging indicator right now. It's already the middle of October, so it'll be a few months before we'll see any lagging indicator to pop up, which is not going to be good. All right, let's go over year over year through September 2022. The median sales price nationwide is around 403K, which is still showing appreciation of 7.6% year over year, but as we all know, that's trending a little bit downward as we concluding for the rest of this year, which is only now October, November, December, only 2.5 months away before the end of the year, which is time flies when you're not having fun for a lot of us, right? But still, appreciation still at 7.6%, but it's trending downward. So we could probably end up toward the end of the year with a slight appreciation, a little bit less than 7% year over year from last year. And home sold is again 5% less from year over year from last year. Everything has decreased. Pending sales 25% less than last year. New listings 22% less. So we're seeing this trend is very clear. The inventory supply of homes is decreasing ever since the interest rate has skyrocketed a few months ago. So we remain to be seen. Median days on market this year to date, September, is 32 days, which is funny. Starkly speaking, is pretty normal, but prior to this year, of what the was at 13 days. Month supply of this is very interesting. This is important. September 22, the nationwide month of supply of inventory is 2.3%, which is way low. It could get lower by the end of this year and beginning next year. So we might go back to a very historical low inventory or supply of homes for sale. But it's still last year, the month of 2021, the month of supply is at least 0.7, even worse. Wow, so this is one more thing. The lower month of supply is the only metric that I feel that will prevent a real estate crash. In order for a real estate crash to occur, we need to see a very high month of supply. For example, 7, 8, 9 months of supply of homes. So we're not seeing that in this current real estate cycle, if you will. Okay, so it's a saving grace by having such a low supply of inventory, 2.3%, which is still a very strong seller's market. This is a saving grace. It's saving the housing market from falling into a real estate crash or a huge bubble. So, okay, and let me see what else. Average 30-year fixed rate mortgage is 6.11%. Give and take is the fluctuation of the interest rate is really mind-boggling. Very distressful for a lot of people. I'm sure you agree. And so, yeah, everything. Let me see. Let's go down. Let's go over several categories in terms of competition. The highlighting my yellow highlight right here states that in Boise, in terms of competition, 13.7% of homes were sold above their final list price. And then the next few metros showing like Northport, which is in Southwest Florida, also showing me 50% of homes sold above the final list price. Phoenix comes in third at 15.3%. Cape Coral, which is basically the same area as Northport, Southwest Florida at 15.4%, and Las Vegas at 15.6%. Philadelphia, which is my hometown, at the highest years ago, that is, was the highest bidding war rate with 62% of homes offers written by resident agents facing stiff competition. Next came Colorado Springs, Boston, and San Francisco, where I currently live for the past 32 years, and Providence, Rhode Island. What does this article paragraph mean? I have no clue. The lowest bidding war are at Las Vegas, Phoenix, Tampa, Riverside, and Houston. The lowest bidding war kind of tell me these markets are, as you know by now, hopefully you know by now, these markets, which I just mentioned, were the boomtown of the pandemic. And now they could potentially become bust towns, as I recorded several videos recently on Las Vegas and Phoenix and Tampa as well. I'll give you more updates on those metros in terms of the housing update in those metros. So look for my YouTube channel so you can watch more of my specific breakdowns of each metro's housing markets on a month-to-month basis. So prices, in terms of prices, the highlight that I can see, important to talk about, the three metros that saw year-over-year price declines are New Orleans, Oakland, and San Francisco. Yes, I understand Bay Area is a very cyclical housing market over the years, and I'm not surprised. I kind of predicted that when the correction occurred, as is happening right now, I predicted the Bay Area and California in general, we're going to see some higher price corrections than the rest of the country. For a lot of reasons I will discuss on my other videos, but really it's not a cause for alarm, at least not for me, because I live here for so long and I understand the California housing market. All right, so let me see what else that jumps out to me in terms of sales nationwide. Sales of homes. Northport, again, Northport is in the Southwest Florida area called Cape Coral. Northport saw the largest decline in sales, falling almost 40% year over year. Next came Cape Coral, 39%, Las Vegas, 38%, Tampa, 35%. Once again, this boomtown, fast appreciating, skyrocketing housing prices, boomtown. During the pandemic, they are currently going through the largest decline in sales. So that's good and bad to some people. For investors, they are good because they are getting a lower price point to purchase actual properties, like our investors are doing that. But for primary home buyers, that's also good too, right? I mean, there's always opportunity, especially in certain markets that have a slight decreases in housing prices. Jacksonville, Florida, home purchase agreements fell through, equal to 30% of homes that went under contract that month. And then the other markets that have a largest canceled contracts percentage-wise in the nation were San Antonio, Atlanta, Orlando, Tampa. Those are the hot markets in the past and will probably continue to become hot markets in the future because those places are very desirable places to live. All right, and the last category is inventory. Austin, Texas, again, we have investors buying in this market for many, many years. And I know the market very well, so let's see what they have to say about it. Austin, Texas saw the largest increase in the number of homes for sale, up 41% year over year. So for whatever reason, there are more inventory. People are putting up their houses for sale in the Austin metro. I don't know why. I will find out soon. And then we're followed by Northport again in Southwest Florida corridor. Next to Cape Coral, 41%, Nashville, 36%, Las Vegas, 34%, New Orleans, 31%. So inventory, they try to, sellers are putting more homes for sale in those markets. I do not know why, we'll find out. So let's conclude with the next few minutes. Let's go with the charts just to validate what I discussed so far. Prices are up 8% year over year in September. As you can see, again, all the negative doom and gloom situations, we're still seeing single-digit home price increases year over year, but we don't know what's going to happen beyond 2022. Remains to be seen. Okay, so see that from 2012, which is this is a 10-year appreciation chart. We see a steady increase in those home prices. And then over here, we see some correction drops recently in the next few months, in the past few months. So we'll see what's going to happen for the remaining 2.5 months of this year. And then the first quarter of 2023 and second quarter 2023 will be very interesting. All right, with the interest rates, with the economy, with the pending recession, the job market, all those factors will play how all those variables will affect the housing market. Does that make sense? Home sale has fell by 25% year over year in September, as you can see the chart. So this is a very steep fall, as I alluded to earlier on this video, that sellers are not selling and buyers are buying. So this is we at a standstill. Once again, the seasonally adjusted home sale has continued to decrease. As you can see right here, and then again, sales fell 22% in September. So see that, see the big drop. This is very interesting, very it's insane. Is mind-boggling actually. So what's going to happen in the next few months? We expect the sales to continue to decrease as long as a 7% interest rate, mortgage rate continue to persist. Time on market, 32 days, which is pretty normal. 32% of homes are sold over the list price in September, which is somewhat surprising. Again, some homes are still getting some good offers, and they're still sold over the list price. But many homes, of course, are sold at the list price or slightly below, depending on what market, what neighborhood, and what have you. All right. And as you can see, average sale to list price ratio fell to 99%. That means that the buyers are able to consummate the sales at 1% below the final asking price from the seller. So the pendulum has shifted to becoming potentially a balanced market, and sellers no longer have the upper advantage like they did before. All right. Record share of homes price drop 22%. And 46% of Redfin homes offers face competition in September, which is getting a lot less than before. As you can see, the trends. 17% of the contracts backed out. We talked about that earlier on the video. So I think that's pretty much I have to say. This competition category, we kind of discussed that. Nothing that jumps off the chart for me. Home price cancellation is at the double digit in most markets. That's pretty to be expected based on the higher interest rate, as more people no longer qualify to close a transaction based on the certain rise of homes or of interest rate, that is. Right, so that's pretty much I have to say. And if you see a lot of value from this presentation, please smash the like button and also subscribe to my channel. And also, if you want to, you could also put your email on my website below, so you could receive free newsletters on our real estate investing community. And so you can receive great free real estate education on real estate investing opportunities in different parts of the country. All right, thank you so much for listening, and this is Siwen Yi. I will see you on the next video. Bye-bye.